Payments Podcast from Bottomline Technologies.
Greetings and welcome to the Payments Podcast. Our episode today uses the occasion of the recently wrapped Nacha conference in Las Vegas, where Bottomline joined the rest of the financial services industry to discuss all things payments. Our guests today were among them, but the reason we've invited Michelle Pasquerillo and Brian Hall today is not for a show report per se. We've invited them to give us their take on the business payments and digital banking industries, and their experience at Nacha has informed their thinking. So what you'll hear today from them on this episode is a bit of a state of play, to steal a term from our friends in the UK. We're taking a look at business payments at the halfway point of this year. Among the topics you're going to hear about are FedNow's launch, real-time payments, and I think the most important part of this, the evolving business cases for those high-speed rails. So as I mentioned, we have two guests. Michelle Pasquerillo is the VP Head of Bank Channel Strategy at Bottomline. She has been with the company for 12 years now, after a 6-year stint at Bank of America. Can't forget that. Michelle describes her approach to business payments as customer-focused, goal-driven, and strategically oriented. We look forward to hearing from her today. Welcome, Michelle.
Thank you, John. It's great to be here.
Great to have you. We're also welcoming Brian Hall to the podcast. Brian is a senior solutions consultant at Bottomline, and like Michelle, 10-year veteran of the company. His role is currently focused on digital banking, and throughout his career, he's been actively involved in the development of cash management applications and working capital solutions for credit unions, corporate entities, and banks. So welcome to you, Brian.
Thank you very much, John. Happy to be here.
So, Brian, we're going to start with you. Anytime the business payments industry or any payments industry conversation convenes these days, there's going to be some talk about real-time payments. I'm interested to know your general sense right now of how high-speed rails are going to be used, and tell us a little bit about how the FedNow launch is being perceived.
Yeah, absolutely. So obviously a lot of discussion in Las Vegas about faster payments, moving money quicker, real-time payments. Obviously, we saw the advent of that with, same-day ACH and those capabilities being introduced years ago. Real-time payments with the clearinghouse have been, a staple of Bottomline's digital banking offering since 2019, and we have several financial institutions that are, leveraging and utilizing that capability. As we, take a look at the introduction of instant payments with FedNow, adding another real-time payment rail this summer, we're super excited about it. Had a lot of discussions at the conference, with our financial institutions that either have already adopted real-time payments with the clearinghouse or haven't, and trying to figure out their strategy and where they're going. From our perspective, real-time payments with FedNow, really is already in the works. The capture of the content and the data is already in the platform. It's really about making those existing, wire transactions, air quotes here, instant, and processing those on the bank's back office, gateway service providers and rails to get those transactions into FedNow. So we're certainly starting to see that conversation, that discussion about, how and why, the use cases exist around real-time payments, FedNow, same-day ACH, and how banks can manage that. Obviously, you're seeing the need to move things, quickly for certain instances. Gig economy, that's one, right? So you've got an Uber driver, Lyft driver, someone that expects to get paid as soon as a transactional event is completed, right? I do a ride, I deliver my passenger, we close out the drive, and I get paid within seconds into my account. Emergency payroll runs. We had a Nacha payroll batch that, somebody forgot to approve on a Wednesday for a Friday settlement. Well, historically, we attempted to pivot those into wire transactions. Well, now we could pivot that into real-time payments or into FedNow in the future. So you've got the opportunity to look at this use case from multiple avenues, venues, et cetera, as we're taking a look at why someone's going to offer and use those capabilities. As you start adding, request for payment, the invoicing capability of those solutions into a platform, that really starts allowing small and medium-sized businesses to have the capability to invoice in platform and really support the opportunity to request someone pay me, provide an invoice or a capability to those folks so that they can do that. And then, receive that payment either back through the real-time payment rail as a real-time payment or through another channel. I may cut and mail a check. I may settle something via ACH or wire. And I've got the opportunity to, complete that loop and then have, conversational messaging within the real-time payment channel about that. So that was a lot of the conversation that we had, at conference and with our existing and prospective financial institution clients. And everybody was hyper focused on that. One final point, there's a lot of the conversation about making payments faster means making fraud faster, or being concerned about the fraud components of the transactions. And certainly that's another aspect where you've got to have that conversation with your internal operational teams about how do we manage that risk, and Bottomline has solutions to help support that, like our secure payment solution. So monitoring and reviewing what's going on with those payments from a rules-based perspective, as well as behavioral analytics. Is this something that somebody normally does, or is this way outside of their historical behavioral activity? So all those conversations were had, at the conference, and since we've been back, we've been following up with a lot of our banks on those particular topics.
So, Brian, thanks a lot. The fraud and real-time payments is an episode we're planning right now. There's certainly a lot more to unpack there, and thanks for bringing that up. So, Michelle, Brian described a lot of use cases, and they seem to be exploding for real-time payments. They're steadily ramping up for B2B. Can you put that development in the context of the broader real-time payments discussion?
Yeah, thanks, John. And as Brian mentioned, if you think about the last 5+ years or so, the number of B2C real time payment scenarios have absolutely exploded, with notables, as Brian mentioned, with RTP, Zelle, PayPal, virtual card. I mean, if you think about your own personal life, again, as Brian mentioned, with Uber, DoorDash, marketplaces, all of us as consumers can make those payments real time and have access to those funds real time. However, in the business to business space, it's steadily ramping. However, we're not seeing the adoption as quickly as we see it in our consumer lives. Within the B2B space, 75% of US financial institutions' accounts are now accessible. The growth trajectory continues despite perceived low adoption in the AP space. It's interesting listening to banks and large organizations. Lots of talk about B2C, and just still a little bit skeptical about B2B adoption. But many veterans in the payment industry remember that virtual cards were new once upon a time, and it took a while for the adoption of virtual cards to ramp as well. And so we think we'll see that kind of similar trajectory with RTP as we saw years ago with virtual card. But there is a real opportunity for real-time payments within the B2B space. We see strong corporate initiatives and heavy investments within these strong corporates to ensure RTP is successful, especially as FedNow is approaching. That will be another quick focus. Also, based on the state of economy, AP leaders are trying to find ways to drive more rebate and more adoption with fintech partnerships to make sure that they're reducing manual processes and accelerating their revenue growth. Again, FedNow set to go live, so that'll have another RTP payment or payment rail available for businesses. And then, as Brian mentioned, document exchange has been recently added to RTP, which means invoicing will be available to integrate invoice or request for payment in the same action. So this also brings the potential for best-in-class embedded experiences closest to frictionless processing for invoice automation platforms, which will be, I think, a big driver.
So it all sounds great. It sounds like a lot of upside here. What kind of businesses, the way you're seeing it right now, what kind of businesses would profit the most, in your opinion, from using high-speed rails?
Yeah, sure. So, as we mentioned, in the B2C space, the gig economy is a perfect example of accelerated growth. In the B2B space, any businesses that really need to make or receive payments quickly and efficiently, those businesses that need to improve cash flow management, reduce transaction costs, enhance security, all of those types of organizations or companies can really benefit from the high-speed rails of RTP in the in the business space. Some companies, to be more specific, are like manufacturing companies. They often have tight production schedules and need to pay their suppliers quickly to ensure materials are delivered and produced. Logistic companies are another great example where they need to make, time sensitive payments to their carriers or other partners to ensure, shipments are delivered on time. Healthcare providers, which is a great adopter to any automated payment. Healthcare providers often need to receive payments quickly from insurance companies or patients. And lastly, like retailers, for example, they often need to make payments quickly to suppliers to ensure they have sufficient inventory on hand, especially now that we're back into heading into box stores for retail companies, or even just online, which exploded over the last 3 years due to COVID.
Yeah. Interesting stuff here. Well said. So, Brian, back to you. My prep for this interview, and I did prep, indicated that there's a general sense in the business, despite there's we've seen some hiccups in the banking business, nothing that's going to be on the order of a crisis. Um, but a lot of what I read and a lot of people I talk to sense that there are some companies reconsidering banking relationships right now. I wanted to know if you sense that. And if you do, how do you think getting, keeping, and growing customers change in this environment?
Yeah, there's been some turmoil, obviously, for commercial banking, for the customers in the business banking space, that are obviously looking for stability from their financial institutions. This has given those corporate clients the opportunity to take a look at, reevaluate their banking relationships. Historically, I was a treasury cash management sales officer and banker, covering healthcare institutions, domestically. And they're always looking at the relationship between their credit experience with their financial institution, where are they getting their lending, and then subsequently applying their corporate cash management, treasury management capabilities across those lenders, and trying to balance that. So I think as you're seeing some of the transition in the industry, a flight to safety obviously is terms that we've heard. Capabilities of looking at the feature functionality capabilities that the banks offer, and making sure that there's a good appropriate mix of ACH, wire, loan payments, loan draws, real-time payment channels, that they can effectively evaluate their business and make and receive payments. Obviously, as a vendor, a fintech that's offering these capabilities to financial institutions, we can very, very easily, for our FI clients, solve for the commodity, right? So, wire screens that capture data to subsequently transact on behalf of your customers, ACH screens that capture the appropriate variables, allow for state tax payments and other, transaction-driven screen builds based on choices within the platform. That's something that obviously we can handle very easily for our clients, allowing our financial institutions to really get in front of their customers, find out what they're looking for, poll them, survey them, bring us in to have conversations with your largest clients in order to really offer bank differentiation in the market. Again, let us handle the commodity, then you can evaluate a portal, evaluate how do we value add to this particular industry some information, so that we can offer payment rails appropriately, but provide content that's most important to, say, the healthcare space, or to oil and gas, shipping internationally, et cetera. One of the other ways that we can offer to our financial institutions, that are using our platforms and our services, we have a solution called Engagement Optimizer, which basically allows us to consume all the data of your customers, the bank's customers, and how they're transacting within the platform, so that for relationship managers, for treasury cash management sales officers, we have the ability to provide drill down insights into how folks are using the platform. I mean, that's going to give insights into attrition. Is company A, moving money away from our relationship to another bank? You would see that within the product. Is volume ramping up? Should we, potentially extend additional lending to this client because they're using us for more, and they're becoming a more valued client to us in the treasury and cash management space. So, I think we're seeing an evaluation, right? There's things that are going on in the industry that are causing folks to reevaluate their relationships, and financial institutions that have that insight, those analytics, can make valued decisions about how to target and go after clients that are looking to make a relationship change and subsequently increase their portfolios.
So what about AP departments, Michelle? I mean, from what I understand about AP automation, it's going to improve my efficiency, which should be a good customer retention strategy, no?
Yeah, absolutely. Let's face it, AP automation can be very sticky. And let's be honest, once you're fully automated, your AP team can now focus on other projects or maybe even take a coffee break or lunch break here and there. So, who really wants to go back to manual processes, cutting checks, running checks to the bank every day using Excel? No one wants that, right? They want automation, they want efficiencies, they want to make sure that they're using their resources in the right way to focus on strategic efforts. So, what we look at is, solid AP automation tools will fully integrate your AP process, starting with the automated file transmission, or you can use APIs or ERP connectors where data is flowing back and forth with ease. And so fully automating and fully integrating your transmission is important and sticky. And then also, depending on who your provider is, all of your company's vendor bank account information in detail can be stored within that AP automation tool that is secure, versus storing that in a company's ERP system, which may not have the level of security measures that a financial technology or AP automation solution would have. And then, again, as I mentioned, as we move into the, new millennial workforce with Gen Z and Gen X, like they don't want to work on manual processes. They don't want to work within spreadsheets, or have to go back and forth between screens, right? They want automation and they want to make sure things are efficient. So, in order to kind of get the best in class solutions and folks that can take your business to the next level, finding an AP automation tool is definitely important, and also will help with customer retention and stickiness.
Brian, back to you. I know payments and cash management were a big topic at the conference. Now, can you tell us, don't get too technical on me here, but there is some technology involved. I get that. But how should a digital banking platform help optimize cash management and forecasting right now?
The absolute base level, cash management 101, right? It's all about receiving your money as quickly as possible, getting that accounts receivable in. On the accounts payable side, it's paying as slowly as possible and then investing whatever you have in your primary concentration account, right? So when I say pay slowly, that doesn't necessarily mean elongate as long as possible. It means pay strategically. So, use the appropriate payment rail to schedule and make payments at the appropriate time. So I've got an invoice. Am I paying that invoice, as a future dated ACH transaction, a future dated real-time payment transaction? Does this vendor that I'm paying exist in the PayModeX network, and I can subsequently pay them that way? And have advanced invoice conversations on the RTP or the PayModeX rail. Obviously, that's that's the important component of, paying my AP and making sure that, I'm strategically managing my working capital and my working cash. So, our solutions help with those capabilities to give that visibility, that insight, that reporting. Also, taking a look at the exposure that a bank has, as they're evaluating, 3-day, 5-day, 30-day risk, as they're evaluating that fraud potential and capability in the secure payments application. So, obviously, these technical components allow us to do that, and that's the point of what we're driving with our solutions that we're offering in the market.
Cool. Michelle, can you address some of Brian's comments from an AP automation perspective?
Yeah, so from an AP automation perspective and thinking about the end user or large corporations, very similar to some of the comments Brian made, is AP automation helps optimize cash management and forecasting with faster processing times as well, right? AP automation can significantly reduce the time it takes to process invoices, which ultimately means faster payments. It can improve accuracy, so it can help reduce errors and discrepancies in the payment process, which again helps remove the need for any manual intervention. It allows better visibility for organizations, which is definitely very important, especially in this state of economy. Better visibility into payment data, allowing companies to track payment status, identify payment trends, monitor payment history. And so that will allow companies to make more informed decisions on cash management and forecasting. Again, super important. It helps streamline workflows for organizations regarding payment processing, reducing any time or resources required to manage these payments. And then lastly, as I talked about in my earlier responses, integrating with other systems, whether that's through ERP or APIs, connections. I think that's super important to make sure that we're managing cash flow.
Okay, excellent. All right, last question, guys. This is the bottom line lightning round here. So, Brian, I'm going to go to you first. Let's say every Nacha attendee is listening to this podcast. What do they need to focus on now that they're back home at their desks?
If I'm a corporate, someone who has banking relationships with multiple financial institutions, I think, now's the time to evaluate, again, take a step back, look at your global, working capital. Am I banking with the right banks? Am I getting lending from the appropriate organizations? Am I using the proper concentration bank that's giving me, insights into my reporting, insights into, maybe my multi-bank position if I do have multiple relationships? Who am I using for online capabilities? Are they providing additional, industry-specific value add, for my dollar? If I'm a banker, am I offering those capabilities, or do I have a deficiency? Am I focused on building the commodity, because that's kind of a waste of time, right? That exists. You can get that from fintech providers. What specific, value add am I bringing to my customer base that is relationship based? I know my customers better than anybody, and I want to be able to prove that to them. Is there some geographic thing that we offer, better than anybody else? Is there a portal capability that we have that we could integrate fintech solutions into and really be, the drivers, the master of our own destiny? So obviously being aware of industry factors, issues, evaluating who we're banking with, are we providing the right products? I think that's probably the bottom line coming out of Vegas.
Michelle, you get the last word. What are we telling people that have been to Nacha and they're home?
Yeah, so thanks, John. What I would recommend for organizations and large corporates is to do your homework and to take the time now that you're back in the office and really map out your entire procure to pay process. Identify gaps, identify large pain points for your AP staff, whether those are manual processes or timely processes or costly processes, right? Determine where you think within each of those important and integral processes within your AP lifecycle where you can gain the most efficiencies, save money, or earn rebates. And then once you've identified those pain points or key areas of opportunity, start researching AP automation solution providers that are leading in their space that can solve most, if not the majority, of those gaps that are important to you, and a partner that will work hand in hand and collaborate with you on making sure that we do solve those needs for you. I also think, and I'll end with this, is that you need to find a partner that supplier relationships are extremely important and fraud is top of mind. Fraud is on the rise, whether it's with card or check or even ACH. And you need to make sure that you find a provider that will protect your payments, whether they're going out in a check, in the form of an ACH or a card, because that is not only important to you as a company and your reputational risk, but it's also extremely important for your suppliers. So I would end with, find a tool that fits, that meets your pain points, that helps earn you and save you money, but most importantly, that protects you from fraud.
That is well said. That was a great episode, guys. Thank you very much. That's a wrap. I want to thank Michelle Pasquerillo and Brian Hall from Bottomline. Thanks once again for tuning in. I'm going to see you next time, hopefully, on whatever your favorite podcast platform is, and that could be Apple, Spotify, or SoundCloud. See you next time.
Payments Podcast from Bottomline Technologies.